Hello and welcome to TradeFlow Television,
bringing you valuable analysis and actionable intelligence
through the global commodity markets.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Chile's mines minister said on Tuesday there were no silver bullets to help the industry weather the coronavirus pandemic, but insisted the world's biggest copper producer was prioritizing workers' health to avoid the spread of infections that could further harm operations. Baldo Procuraca told Reuters that Chile's copper industry had kept the contagion rate to just 2% with a strict testing regime and by keeping half of its more than 200,000 strong workforce at home. Neighboring Peru, the number 2 copper producer, opted to shut down all industry for 100 days but still had the world's 5th highest case rate, he said, while Uruguay had maintained all productive work and reported just 29 deaths from COVID-19. Leading copper miners in Chile, including state-owned Codelco, BHP Group Limited and Anglo American plc have maintained and even increased production until now. But as coronavirus cases have recently spiked with at least 10 confirmed deaths, the miners have altered shift patterns, suspended upgrades and smelter operations in a bid to stop the spread.
Moving on to the top news in the energy sector.
U.S. crude oil production is expected to fall by 600,000 barrels per day (BPD) in 2020 to 11.63 million barrels of oil per day, the U.S. Energy Information Administration (EIA) said on Tuesday, a smaller decline than the 670,000 barrels of oil per day it forecast previously. The agency now expects U.S. petroleum and other liquid fuel consumption to drop 2.1 million barrels of oil per day to 18.34 million barrels of oil per day in 2020, a smaller decline than its previous forecast for a drop of 2.4 million barrels of oil per day. Oil prices collapsed this year as the coronavirus pandemic slammed global demand and restricted travel across the world. Demand worldwide has started to recover as some countries ease lockdowns and stay-at-home orders. The EIA said it expects 2020 world oil consumption to drop by 8.15 million barrels of oil per day to 92.89 million barrels of oil per day, a smaller decline than the 8.34 million barrels of oil per day previously forecast.
We will now look at the top news in the agricultural sector.
AGRI, one of Russia's leading agriculture consultancies, said on Tuesday that it had downgraded its estimate for the Russian 2020 grain crop by 2 million tons to 126 million tons due to low yields in part of the country's southern and central regions. Its forecast for Russia's 2020 wheat crop was cut by 1.5 million tons to 78 million tons, it added in a note.
Next we have agricultural price moves.
Malaysian palm oil futures rebounded on Wednesday as soy oil prices strengthened, with improved exports and expectations of tighter supplies of Indonesian crude palm oil aiding sentiment. The benchmark palm oil contract for September delivery on the Bursa Malaysia Derivatives Exchange was up 30 ringgit, or 1.27%, to 2,389 ringgit $558.57 a ton at the midday break. The contract had dropped 1.4% on Tuesday. Dalian's most active soy oil contract rose 0.1%, while its palm oil contract gained 0.52%. On the Chicago Board of Trade, soy oil prices shed 0.64%.
U.S. soybean futures fell on Wednesday as concerns over adverse weather in the United States eased, pushing prices to a 6-day low. Corn fell as conditions indicated that the hot, dry weather across the U.S. Midwest would not be as severe as initially feared, while wheat edged higher. The most active soybean futures on the Chicago Board of Trade were down 0.5% at $8.98 minus 1/4 a bushel, near the session low of $8.96 minus 3/4 a bushel, the lowest since July 2. Soybeans closed down 0.5% on Tuesday. The most active corn futures were down 0.4% at $3.51 a bushel, having closed down 1.1% in the previous session. The most active wheat futures were up 0.3% at $4.96 minus 1/2 a bushel, having closed up 0.4% in the previous session.
We will now take a look at energy price moves.
Oil prices were broadly stable on Wednesday, recouping earlier losses after rising U.S. crude stockpile data and an increase in coronavirus infections in the United States cast doubts over a swift pickup in oil demand. Brent crude futures fell 1 cent to $43.07 a barrel by 0832 GMT. U.S. West Texas Intermediate crude futures dropped 8 cents to $40.54 a barrel. Both benchmarks are set for a fourth session of daily percentage changes of less 1% in either direction.
Moving on to metal price moves.
Shanghai copper prices on Wednesday hit their highest in more than 14 months on worries of supply disruptions from Chile, the world's leading producer of the red metal, and as a bull run in equities in top consumer China boosted sentiment. The most traded August copper contract on the Shanghai Futures Exchange hit its highest since April 22, 2019 at 49,970 yuan $7,121.68 a ton, while 3-month copper on the London Metal Exchange was trading steady at $6,187 a ton at 0708 GMT.
China's steel futures rose on Wednesday on optimism about demand prospects in the world's top metals consumer, while low domestic stockpiles also lent support. Construction steel rebar on the Shanghai Futures Exchange closed 1.8% higher at 3,702 yuan $527.61 a ton, advancing for a fifth straight session. Hot-rolled coil, used in cars and home appliances, climbed 1.9%, while stainless steel gained 0.8%.
Finally, we have the most recent news on the financial market.
The dollar dipped slightly on Wednesday as investors weighed hopes for a swift economic recovery against fears about a resurgence in the pandemic, particularly in the United States. Demand for the U.S. currency as a safe haven ticked down as oil prices eased on oversupply fears. Stocks dithered in Asia and European bourses opened in negative territory. Risk sentiment was also undermined after Federal Reserve officials expressed concern that rising coronavirus cases could harm economic growth just as stimulus measures start to expire. The euro strengthened a modest 0.12% to $1.2870, while a recent fall in selling positions against the greenback provided room for possible further drops. The greenback bought 0.9414 Swiss franc, a 0.13% dip. Sterling rose 0.14% to change hands at $1.2560 but was stable against the euro at 0.8988 as talks resumed between Britain and the European Union on terms for their future trade relations. That is all for today's news on the commodity market. Stay tuned to TradeFlow TV as we continue to provide you with more updates. You can also follow us on Twitter at TradeFlow TV1, which allows you to watch our program on your mobile device or desktop.